It's Rick, and it's Friday, October 28th. The month is pretty much over. Nice to be back in the trading desk for after a couple of days off. No change in the model. We're getting close though to the 50-day on the S&P turning up, and the Qs are lagging a little bit behind, as we'll see in the charts in a minute. But before I start on the where the indexes are, I just wanted to review or remind any of you, I guess is the way. If you're holding any stock or stocks, plural, that are currently trading below their 200-day moving average, this is the kind of bad shit that can happen when you're owning stocks in that area. This is Meta, or formerly Facebook, or we used to call it Faceplant. And it had a massive gap down yesterday and didn't get much traction again today. And you might be thinking to yourself, oh crap, I mean, this is down from a bunch, 180 bucks not too long ago, and now it's cut in half. This has got to be a great time to buy. Not so fast. Let's just look at a weekly chart. Spread this out a bit. Look what happened up here when we got up around the 200-day. This is the 40-week moving average, and it went under. Look what happened here. The last gap down, it gapped down from 320 bucks more or less down to like 230 bucks, like almost 100 point drop. And most of that happened in one day. And you're probably at that time we're thinking, well, shit, it's a third off. This is a screaming buy. Well, look what's happened since. Not so much. And this kind of bad crap does not happen if the stock is above its 200-day or 40-week moving average. Sure, you get some bits of downs, which is why I still have like an 8% rule. But you're not going to experience this. This is down off its peak, off its high. It's down 74%. And even from the 200-day 40-week moving average, from here to here, it's down 69%. So I can't stress this enough. Just if anything you're owning is below the 40-week moving average or the equivalent 200-day moving average, give it a tiny short leash, because this kind of nonsense can happen. Anyway, that's my rant for the day. To the indexes, the S&P, I drew these lines, I think it was before I went away a couple of days ago, and the train is pretty much coming in on schedule. It's probably maybe getting a little ahead of itself, but we're now trending. The 8 and the 21 are moving up very nicely. The 50 is flat, although it's starting to trickle up. I think by Monday this will be, I'll change the model so this is on an uptrend. And well, we may stall around here. My guess is that we're going to go up and touch this 405 area, 406 area, which is another 6-7% from here over the next couple of weeks. The Qs are lagging a little bit further behind. They're not quite as strong, but again, their fast moving averages, the 8 and the 21, are now moving up. The 50 is still trickling down, but it's looking more promising. This has been held back, of course, with Faceplant. Google had a bad week. Amazon had an awful week. So a number of big names got hammered. Small caps up 2% today. It's after a couple of down days. It's actually closer to the 200, so it's showing good strength, as are the mid caps. And what's I find quite interesting, I don't rarely ever follow it, but somebody pointed it out to me yesterday. The Dow Jones which is really only 30 stocks, 30 of the biggest stocks in the US. It's actually now got above the 200-day moving average. So that's, if this one's, normally this lags behind. In an uptrend, the Dow will generally lag, but in a downtrend, it will generally perform a little bit stronger. So clearly, big money is coming into these 30 biggest stocks. So is that an indication of money rotating out of? It's probably money rotating out of things like Amazon and Meta, which I don't believe are in the Dow Jones 30, and rolling into more safety. So I found that kind of interesting. Don't know what to make about it for next week. We'll just play the cards as they're dealt. If I go back here to the SPY and look at it on a weekly basis, I drew these trend lines some time ago, and we're now just right in the middle. So like I say, I think there's a strong probability we're going to go up and touch this declining 10-week, 40-week moving average, which will stall it out a little bit. And then, well, it'll be interesting to see how it reacts around there. Do we just roll over and head back down again, or keep on going? And then the next test will be somewhere out here in about 2 or 3 weeks, around the 410 area. And can we actually now break this downtrend line and start going into an uptrend line, in which case I'm going to get very bullish. Most of you now, I think I said a while ago, you should probably put a toe in the water and be 25% invested. I stand by that. It could actually increase that to 50% and keep 50% in cash. Just in my own trading, my Canadian sector fund is now 42% invested. The US is only 29%. And my trading account is 46% invested. And that's up from 7% just 2 days ago. So I got a little bit aggressive today. So how's my stuff doing? And I'll show you the positions I added today. DIGI keeps trundling higher. Doesn't have earnings for another 10 days yet. So hopeful this can take out this high. ELF, same thing. ELF is trundling higher. It took out the high by a couple of pennies today, but it was late in the day, so it didn't plow through that. So that may happen on Monday. Let's hope. I did add HAE in and around, where was my entry? 81.80 in here when it broke this downtrend line. It's kind of short, but and it closed right near the high. Some of you have watched previous videos on the patterns that I'm looking for. This was a great example of stock moving up, pulled back 12%, moved back up to test the highs, pulled back only 8%, pulled back up, test where it was before, but only pulled back 4%. So it's got tighter and tighter and tighter, and then rocketed out of there. So I did have this one. I owned this one back in here somewhere. And now it was doing it again. I just drew this box around here. So it's not quite as clean as here because the pullbacks have been pretty well to the same level. All this one's a little shallower. And then arguably this breakout and the pullback here was very shallow. And so this is why this one got on my radar. So I took a fairly big position in this today, although to reduce my weekend risk, I did take a quarter of it off right near the high, but I still have a sizable position in this. CF, not a very pretty looking chart. It looked a lot prettier earlier in the day. It broke above here. Yeah, I saw the break. I had an alert set. I did not take it. And then it pulled all the way back down, which was my inner senses said, you know, I should leave this one bloody well alone. But I picked it up at 104 and change, down right now to the bottom, with a relatively small position and an extremely tight stop under the low of the day. So, it's a high risk, high reward kind of trade for small size. So if we'll see how that one works. And then SSO, which is the double leveraged S&P 500. So I picked up this one right where that green line is there. Again, I took a fairly decent sized position. So I exited 3/4 of it right near the highs, right near the end of the day. So I'm only holding a quarter position because this is moves 2 times as fast as the S&P. There's a little bit more risk in that. So I wanted to reduce my risk holding this over the weekend. That's that. And now the other positions that I have that are my open, what I call sector positions, I've moved they've all performed nicely. You can see where they are in relation to the green line where I entered them. They're all up quite nicely. So to the point where I originally raised my stop before I went away. And then today I raised my stop to break even. So I really don't care what happens to these right now. My stops are break even. So this is where you want to be, or get you to be for sector index trading. Once you get into a profitable position, you can set your stop and you don't even have to look at it. I've taken these now off my screen and I only look at them at the end of the day. So once a day, I'll just check these, see if I have to adjust my stop the next day. Obviously, they take out my stop, like XME did take out the stop. It ran up a couple days ago quite nicely. I raised my stop to break even, and sure enough, got taken up. So cost me $5 commission. So that's the kind of trading that you really want to get into, where you can just sort of set it and forget it and only look at it once a day. You don't need to be looking at the charts the same way as I do. So that's a very quick and dirty recap. I'll maybe try and do a video over the weekend on some screening, see if there's anything setting up, or go through all the sectors, see if there's anything interesting there, and pass it on to you. So have a great weekend, everybody. Happy Halloween.